So I received a question from one of our terrific students in the Winning Trader program that we're presently going through with our most interested traders in our trading community. So the Winning Trader is a 12-week, it was supposed to be 10-week, but it's actually 12-week program. We've added a couple of bonus weeks where week by week we roll out a trading strategy where our traders are having success. So we roll out the strategy and then we present variables for how we attack a particular setup. And then for a week, the people in our program and our traders who are training with us on our desk, they focus on that one trade for the week. They do a playbook trade at the end of the day. They get feedback from one of our traders on our desk, individual feedback from the traders on our desk who are looking at the playbook trades that our students are making. The students can also look at other playbook trades from other students. And so there's this very intensive week by week analysis and study of a particular setup that's working, that clearly has edge, because our guys are trading it with edge, that people go through. So as is always the case, and we supplement all of that with mentoring sessions where we're pointing out live trading examples that we've made on our desk. And as always the case, one of our better students asked me a question and said, "Good morning, Mike. Loving the Winning Trader program. I have a question. I know this question can vary. What are the best numbers for ATR, average volume, RVol, short float for intraday trading?" And so, as we talk about in the course, before you make a trade in a particular stock, there's certain data that you want to know about the stock because that impacts how it will trade. It impacts how much it might move, it impacts your risk on the trade, it impacts the reward on the trade, and it impacts how fast it might go up. You need to know this information to get a full rep live trading it to get the best experience. And so ATR, as this trader is asking about, refers to the average true range. The average true range is how much the stock moves on an intraday basis. So to answer your question, I look for stocks that have an average true range of 0.8 or higher. If something does not have an ATR of 0.8 or higher, it better have a very fascinating, compelling news catalyst behind it. Average volume. So I like stocks that trade between 1 million shares of average volume and 10 million shares of average volume. If something trades less than 1 million shares of volume, it really needs to have a very compelling story, a very compelling news catalyst behind it. Same thing if it's above 10 million. And the reason for that is if something is above 10 million shares, my sense is it may not move enough. And if something is below 1 million shares, my sense is that it may be too whippy. So those are just general guidelines. I don't stick to them all the time. There are times when I go off plan, but that's the sweet spot for what I'm looking at. RVol. So RVol stands for relative volume, and what it does is it measures how much volume is being done in a particular stock or product at that given moment of the day relative to how it normally trades. So let's say a stock normally does 1 million shares between 9:30 and 10:30. And on the day we're trading it, it's done 5 million shares. RVol would be 5. And so this is doing 5 times the normal volume that it normally does. We want to find stocks that have a high RVol because that means they're very much in play. We want to trade stocks that are very much in play because they move away from price. They offer really good risk-reward opportunities for us. They allow us to be more efficient with our capital. So I'm looking for an RVol of 3 or higher when I'm trading a stock. If an RVol is less than 1, I may say to myself, why am I in this? It's not really in play today. I'm going to be very suspicious about anything that I'm seeing or doing, following through in the stock because the relative volume just isn't there. Short float. So again, I'm going to give you some guardrails. I like to trade stocks that are under 20% in terms of its short float. I think for newer traders, a short float with 30% or higher may be too tough for you. Often we'll advise traders to stay away from stocks that have a short float percentage of 30% or higher. So what that means is, of the outstanding shares that can be traded, 30% of the owners are short the stock. And so when that percentage is too high, that breeds natural buyers of stock. And when that number is so high, it can cause the stock to be very whippy. It can cause these sporadic moves in the stock, this covering that comes out of nowhere, which is kind of hard to glean. And it makes looking at price action and making decisions on past price action a little bit more difficult. I think that there's not necessarily, and the other thing is, if a short float is 1% or 2%, that's fine. I'll trade that. I will understand that there's not going to be these artificial buyers who have to cover shorts when I look at something like that. I think short float is very insider baseball for lots of people, so I won't spend that much time on it. But the point you should take away is, if the short float interest is too high, you should stay away from it, and you should develop a general rule about that. So those are some metrics for how we choose stocks. We use them every single time. We know that information every single time we make a trade. I suggest that you do as well, so that you're getting the best trade experience. And you need screen time to get better as a trader, and you need consistent screen time to improve your trading. Hope that helps. We'll talk to you soon. Trade well.